How much tax do you pay in the great state of Missouri on $60,000? By special request, we're going to go into Missouri, the show me state. So let's dive right into it, my friends, and see what the tax consequences for you on $60,000 in retirement in the great state of Missouri. So welcome to the Heritage Wealth Planning YouTube channel, the place where you come to learn about taxes in the state you're looking at retiring to. As we know, because I've done videos on this before, the vast majority of us retire in the same state, if not the exact same county, if not the exact same home for which we live in today. So this is always going to be applicable, but the large percentage of us are not going to move from Missouri to Tennessee or Tennessee up to Washington State. So if you're looking at retiring in Missouri, subscribe down below or in any of the other 49 states. And of course, hit the bell to be notified for more content. So let's dive right into this. I'm going to be interested here because some of the southern states are very favorable and some of the Midwest states are not. And does Missouri fall in the Midwest or the southern states? We shall find out. My inclination, actually, I don't know. So let's find out. So the first thing we do is go to heritagewealthplanning.com and you'll see the link at heritagewealthplanning.com. You see my man, Dave Simon. Dave's the Simon Web Design. He does all this stuff for me. So if you want a web developer and a host, Dave is your man. Very cost friendly and a very good guy. And the best thing about it, if you have a question on web design, he'll call you right back, which is good. All right, so then we go to tax tools and then we click on interactive tax tool. All right, so that's going to take us to the interactive tax tool, which will provide us the taxfoundation.org for the federal tax incentive tool, where you can run all kinds of different scenarios if you want. And then we'll scroll down once the system processes here, and it'll take us to smartasset.com, tool that they allow me to put on my website. And so you can use it directly through Heritage Wealth Planning, or you just go to smartasset.com, whatever rocks your world there. So I think Missouri is right there, and we're going to click on Missouri and see what this looks like. All right. So again, we are a married couple filing jointly. There we go. We got $40,000 in Social Security. We got $20,000 in IRA income, and our income tax is $56 to the state of Missouri. And let me write this down because I am putting this in for my book to soon be published on the state-by-state guide to taxes for retirees. And what's done, I'll let you know, and it'll all be an ebook this time. It won't be very expensive, $5 or something like that, but nothing to the feds. All right. So as you can see, 40,000 Social Security, 20,000 IRA, 56 to the state, and nothing to the feds. So now it's flipping around and say we got 20,000 Social Security and 40,000 to the feds. And let's see what we're looking at here. So now we're looking at $970 and $2871 to the feds. So our total tax burden is $3,841. Wait a second, Josh, I can hear you screaming out there. You're telling me I got to pay $3,871, whereas before I only had to pay $56. And I'm saying yes. And the reason for that is, of course, we go to our trusty whiteboard here, and we have to look up the thing called provisional income. Now, if you haven't read my book, The Tax Bomb in Your Retirement Accounts, I highly suggest you get that on Amazon for $4.49 for the Kindle version, because it goes into this in full detail, but I'll give you the synopsis of it here. First thing we got to find out is what provisional income. All right. And all that means is how much tax do you pay on your Social Security benefit? That's all that means. And so what you do is you take half your Social Security benefit plus all your other income. And all the other income in this case is including your tax exempt interest. So our Social Security benefit is $20,000. So we take half of that. And we take all of our other income. In this case is IRA distributions, all else. Now, if we had $10,000 of tax-free municipal bonds, we'd add that to this mix, but we don't. So we're just saying $10,000 of Social Security, and then all of our other income. So our provisional income is $50,000. And what that will tell us is we have 3 bins in which to dictate how much of that $20,000 of Social Security is subject to income tax. So we got $50,000 as our provisional income. The first $32,000, none of it is subject to income tax. The next $12,000, 32,000 to 44, 50% is subject to income tax, which in this case would be $12,000. And then anything 44 and above, in this case is subject to 85% of that will be subject to income tax. And so what we'll see here, let me just erase X, I messed that up. All right, so what we see here is $50,000 is our provisional income. The first $32,000 is free and clear. The next $12,000 between 44 and 32, 50% of that is subject to Social Security taxes. 50% of that is subject to income tax. So we have $12,000 in this category, which means $6,000 will be times by 50%. Anything above $44,000, 85% of that amount, in this case is $6,000, will be times by 85% and be subject to income taxes. And because we can just quickly do a calculation, we know that our total Social Security will be $11,100 that is subject to income tax. All right, so 50% of 12,000 is 6,000. 85% of 6,000 is 5,100. You add them two together, and 11,100 is our amount of total taxable Social Security benefits. 11,100. All right, so we know Social Security is taxed beneficially, but in this case, a pretty significant amount of our $20,000 of Social Security income is subject to taxation. So now we take 11,100 plus all the other income that we had. Again, 40,000 on IRA distributions. We add them together, and our AGI is 51,100. 11,100 for our taxable Social Security, 40,000 from all of our other income, and 51,000 is our AGI. But we do have two standard deductions of 26,600. And if I'm not mistaken, that means we take 51,000, subtract 26,600. $24,400 is our taxable income. And that's what's taxable. All right. So 11,100 is our taxable Social Security. 40,000 is our IRA distributions, equals 51,100. Subtract our standard deductions. 24,400 is our taxable income, which simply means that the feds are going to tax us. We're now in the 12% tax bracket. And the first 19,000 something is taxed at 10%. The next amount above that is taxed at 12%. And that's how you get your $2,871 of taxes to the feds. Now, Missouri obviously taxes it their own way as well. And you add another $970 for the state of Missouri taxes. And there's your total tax burden right there. And that's how it works, my friends. A lot of people don't realize that. So watching this video, now you do. All right. So what are the best towns to live in Missouri? Now, this is a different guy. This is a person who's retired, who has 15,000 Social Security benefit, 10,000 pension, 15,000. What's the else he got? I can't remember the whole situation. He's got 50,000 total income, 15,000 from Social Security, 10,000 pension, 15,000 from IRA distributions, and 10,000 wages. So now this is not the same guy we're just using for another example. This is somebody else, but he says, well, okay, or she, I want to live in the cheapest place in Missouri, and smartasset.com breaks it down for us. And look at Town and Country, Missouri. Now that sounds nice. Sounds like one of those, we used to drive a Dodge Grand Caravan, but if you want to go upstream, you'd buy a Town and Country. Ooh, if you're hoity-toity, a Town and Country minivan. They're actually nice. I don't even know if I don't think they still make them anymore. Man, those new Honda Odysseys, 2000, I think they're 19. Ooh, those look sharp. I'm telling you, man, if you've never driven a minivan, whoa, I love them. All right. So Town and Country, Missouri, the taxes this guy pays are $54.56. Now he does have 50,000 of total income. Our guy only had 60,000, but our guy had 60,000, which 40,000 was from Social Security. We had no tax, and this guy's got 50,000 with only 15,000 from Social Security. So he pays total tax of $54.56. Ooh, Town and Country property tax 1.03, so significantly higher than the rest of the not the rest of the state, but some of the other parts of the state. Sales tax, a pretty significant sales tax, and then fuel tax paid. Sales tax is moderate. Then the fuel tax $221. So the retirement tax friendliness for Town and Country, Missouri is about 72%, which is on the high end. I'm actually surprised to see that given the property taxes are so high. But here's how they figure it out, smartasset.com. They literally look at every single town. They take the median property tax divided by the median property value, and that's how they get their effective tax rate for that town. And so 1.03 is not cheap, that's for sure. Especially when you can go to Neosho, Missouri, and pay I was at 35% cheaper, but I don't know what these towns are. But anyway, and that's how you figure it out. And so I hope this helps, my friends. As always, my cell phone just rang, so pardon for the interruption. But if you have questions, thoughts, concerns, don't forget to comment down below. If you know of some of these places in Missouri, I don't know any of them. I don't even know if I've been through Missouri just driving a couple times, so I don't even think I've ever stopped. So I'm ignorant about it, but relatively friendly by and large, but there's some stuff you need to be thinking about. So don't forget to subscribe. I'm always welcome to comments. Thumbs up always help. And of course, you go to the blog at heritagewealthplanning.com and you can get all these tax tables for you. Thanks now. And we got